Welcome to Bitcoin Escape Plan. Everything is about to change for the momentum of Bitcoin, and if you're not paying attention to a few very key indicators that we're going to go over in this video today, then you're probably going to miss the action when it happens. So stay tuned. We're going to go over the 4-hour chart first so we can understand in the short term what is going to occur for the price of Bitcoin. Later on today, I'm going to analyze this short trade in particular. It did play out the way that I believed it was going to play out. So we'll go over that later on in the video. And before that, we will go over the higher time frames just to kind of get a clear picture of where the price is at relative to our overall thesis and how it will continue for the rest of the year. If you are new to the channel, you can go over to bitcoinescapeplan.com. Every Monday, that's tomorrow, I release another newsletter that breaks down all of the key levels for the price over the course of the week and just gives you like a good kind of primer to have separate from these videos that you can reference throughout the week to see how close we are to the key levels that I have indicated. All right, back to YouTube. On the chart here, we have a very clear signal. This is on Friday. We broke back to that 73.8K level one more time before capitulating and failing and going back down below it. Now, this is important psychologically because 73.8K is the all-time high in March of 2024. That's right after the initial ETF spike in December 2023, January 2024, before we did rise to unprecedented all-time highs right at around that level in March of 2024, which typically does not happen. I'll go over that a little bit later on when we go into the higher time frames. It's just easier to show on that side of the chart. So the 4-hour in particular, there's two things that we want to look at. There is this downtrend anchored VWAP, which I've talked about multiple times on this channel before. That is set from the 126 all-time high. The mid-range of that is currently sitting at about 85.4K, and it is my belief personally that that is probably the highest that we're going to see for the rest of the year. So that's just the baseline of what is happening with that downtrend anchor VWAP. The top band of that one is sitting at 100K.7. We're not going to see that. So likely what is going to happen when we see these bands is now that we've broken below the band, the argument is, can the band break below it and continue and trend towards the middle? It's not very likely that in this stage of a bear market, and again, this is the 4-hour chart, this is not a higher time frame chart, so we will see swings over the course of the year. It's not very likely that we're going to show strength at that middle band and then head up towards that higher band. Now, it's not impossible, but nothing that we go over later in the historical time frame shows us that. Nothing to me in the narratives around the stablecoin bills and everything else and the liquidity when it actually enters the market, such that I understand it, none of it speaks to us randomly rocketing to new all-time highs. So me personally, I'm going to go with what the chart is actually telling me, which is more likely that we're going to have a reaction towards 85.4K, 86K over the course of the next couple weeks. And I do think we are going to fail it at that point, which again, I will go over on the higher time frame. So that's the downtrend anchored VWAP. The other one that's important is this elder VWAP, as I call it, which I have drawn from 2011 to now. I never touch it. It's awesome. This is the middle band. We have been at the middle band now for several months. Well, not several months, but since the beginning of February, we've been interacting with that middle band. Currently, we're showing a little bit of strength with that middle band after several attempts and breaks lower. So same thing as the upper band. You know, once we've broken this bottom band of the downtrend anchor VWAP, we're heading towards the middle. So it's the same thing where we've been heading from the upper band of the elder VWAP, which we broke, I believe, it should be this guy. Yeah, we hit interaction in April and we properly lost it in November. So when we lost that upper band, we had to start trending down towards the middle band. So the process that we're experiencing at the moment is we've now touched that middle band and the price is having to decide, okay, well, we've had a strong reaction to it. Is it time to stay at this middle band or is it time to break down toward the lower band? The lower band on the elder VWAP being 36.5K, which again, if you've watched other videos in this channel, my belief is that the low of this year is somewhere between 34 and 39K. Again, I will go over that briefly in the higher time frames later, but you can see that in any of the videos where I talk about the price, which is all of them. So what we're waiting for now is to see confirmation of, are we going to continue trending towards that upper band of the Elder VWAP, which the upper band of that one is sitting at 95.4K, which I do not currently believe we are going to see. That was my original base case in December, I believed that. But with how the price is behaving now, I just don't see that as being super likely. Again, I will cover that in the higher time frame. Sorry to keep repeating that. It's just important that these anchor VWAPs do not show up the same way on the higher time frames. They are very unique to the 4-hour time frame, telling us things about the price that we don't have the reference for the monthly and the weekly, because the price is so high above it for the entire time that we don't get interactions with it. So with having a local downtrend anchor VWAP, we get way more data on the interactions at certain price levels. And then same thing for, I like to draw one from as early as the chart goes. I don't see other traders and analysts on YouTube using it that way. I see most people using it for like the downtrend anchor VWAP or like local trades. And it probably does work more accurately, I guess, for that. But for me, I like it because it really helps me understand, what is the broader trend? Where is the price actually going to go? How is it going to behave over this given time period? And again, that's primarily the story of, you got to think about each one of the bands is like a magnet. So if we get to the magnet, we stay at it for a little while and then realize we have an opposite charge, it's going to head back towards that other end that we're now polarized towards, Whereas if we stayed here for a long time, eventually it is going to push down towards that lower one. And what I really think is going to happen is we're going to see a rejection off of that top one, which again, I don't think we're even going to get there. I think we're going to get to the middle band of the downtrend anchor VWAP at 85.4-ish, and then continue failing downward, I believe. So now that we've seen kind of the short term, I'll give the other key levels to take a look at for the 4-hour, and then we'll dive into the long term. I know I keep talking about the long term thing. So 71.8K is important in the short term. We're currently kind of struggling with it, but we've had strong interactions with the 4-hour SMA, at least since Wednesday the 11th. We've been pretty strong on it. We had broken to the upside and the downside quite a bit before that, but we're showing some strength off it now. We're showing some strength off of that downtrend anchor VWAP as well. This is a lot healthier than this was. This has more hope that we can stay above it, and if we can stay above it, then we're going to continue until we get towards this trend line, which is probably right around this Fibonacci pivot. 77.2K, I would imagine, is around the time where we interact with that. And again, on the higher time frames, I believe that is 76.2K. Which we will go over shortly. So what we really want to pay attention to is the 4-hour SMA is clearly still sloping upward. It had been chopping for a long time. It is not chopping anymore. It is starting to rise. It's essentially at right around, not quite the highs, obviously. We've gone a little bit higher than this, but right around the highs of the earlier part of this range. And as you can see, we are above this part of the trend line, which is good. It's healthy. It gives us permission to continue higher. Psychologically speaking, we are pinned between two prices at the moment, which is the 69K original all-time high in 2021 and that March 2024 all-time high of 73.8K. So psychologically, the price is trying to form support or resistance here. I think initially we will form support. We will then fail off of 86, and then we will break down and it will be formed as resistance. That's just basically what I believe is going to happen. In the short term, however, we are probably going to see, again, if we get a squeeze down towards the SMA is at 71.2-ish. If we get a squeeze there, that's still higher than we originally said. So in Monday's newsletter video, I said that we needed to have a close on the week above about 70.2K, I'd be happy with. Currently, we're at 71.7, which puts us pretty healthy above where we need to be, at least to be above the 50% mark of that range that we're in, which again, I'll talk about on the weekly time frame shortly. But yeah, short term, we want to see a strong reaction to 71.8K. We want to stay above comfortably that 69K, which again, we're now seeing 2 points of confluence on that. We're seeing that both the downtrend anchored VWAP is right around that level, and we have already, for the moment, shown that we have strength above it and that we don't need to retest it. And that's dictated purely by that 4-hour SMA, which again is at 71.2K-ish. And same thing, as long as we can continue to have strong reactions off that, then it does favor the upside. I will go over this short trade briefly later. Let's jump into the higher timeframes. Now, most of this is easier to see on the weekly, but I will briefly explain it on the monthly. And then this is what I was talking about before. This is the March 2024 peak that had never happened before for Bitcoin, that we saw a local high that early in the halving year. I think that that permanently fucked up the trajectory of the price, essentially. I think that's why we didn't get 130 to 150K. It's because psychologically the market already experienced a new all-time high early, and then we just kind of got dragged along for the election and everything else, but we had lost most of the excitement happened early. Premature, so to speak. So the range that I was talking about before is 64K to 76.2K. Now that's very important. 63.1K is the midway point of this 126.3K high. Super important. So around, call it 63K is about the 50% retracement mark. We did break below that initially in February, and then obviously have recovered since then. But that 50% retracement mark is essentially what we look at for previous cycles. So like I said on Threads, it's playing out exactly like it did in 2022 and 2018. And the only difference being that we are already below the monthly SMA, whereas here we were still chopping to maintain it. And same thing here, we were well above the monthly SMA at this time, but still pretty much the same. Like, it doesn't really matter if February is up and March is down, or April is up and March is down. It doesn't matter. The point is that it is like very cyclical in this time, where it's up and then it gives it up and then it climbs back and then it gives it up, you know, like it's very, very choppy typically during these times. And especially in interaction with the monthly SMA is what actually tells us the momentum for the price. And again, look at us now. That's uglier. We gave it up quicker. And now what history tells us is that typically it's going to take us between 7 and 11 months, somewhere around there, to get back above this monthly SMA. We are currently only 3 or 4 months below it, depending on how you measure it, which means we have a minimum of 3 and probably closer to like 8 months left. That we are below that monthly SMA, which at the moment is not, it's still kind of rising. I mean, that is higher. So it's starting to flatten at least, but typically when it starts to flatten, that means it's going to drop over time. Flattens, this one doesn't really drop. This one stays more consecutive, but as you can see, price breaks above and then breaks back below it. So there's nothing really preventing us from staying below it for a long time, and then even when we come back above it, we could still potentially lose it. So this is what I was talking about, that 96K level that I was originally talking about earlier, that in December, that's what I believed we were going to get to. I think we've already seen that failure. You know, we saw that failure here. We saw an attempt to go higher in January, and then we saw full capitulation way below it. I now do not believe that the price can get back there, just based on, again, what I just explained, that the price typically will stay below the monthly SMA for a period of 7 to whatever, 11, 12 months, something like that. That's currently at 89.8K, or 89.9 rather. What does that tell me? That tells me that the price cannot get above 90K for another, whatever, call it like 4 to 10 months, something like that. Baseline expectation for most people who've been around crypto for more than 20 minutes is October, is where the actual bottom will be. That doesn't necessarily mean that we're going to hit the monthly SMA right after that, but at least the price suppression part of this phase, those lows will probably be around October. And again, I'm expecting that somewhere between 34 and 39K. Mostly just because of the levels in here. Like this guy, this is 32. 32 is super important. I'm assuming that those people do not want the price to go below their cost basis, and therefore I think anyone with money from that time period is probably going to step in and increase their position quite a bit. That's also way below where we are for the ETFs. Like fairly significant haircut from that. That's probably 20-30%. Nope, that is not what I wanted to click. I love TradingView. Yeah, like 30%, 20-30%, which is still, still a decent amount that we can drop even from highly respected levels. And we're currently there at the moment. This is kind of the same thing as I was just articulating for that, where this is the 2024 ETF buyers. They are currently acting as support for the price. However, if we see a significant failure, which for me, and actually we can go into the weekly chart now because it's essentially the same thing. If we see a significant failure off of the weekly SMA as it continues to trend downward, what that means is the price is going to fail, and then it's going to continue down for a long period of time until it can retest the weekly SMA again, and is still overwhelmingly likely that it's going to be a failure at the time that it interacts with it, just based on the history of the price. I don't care who the president is. I don't care about the laws that they're enacting and all that. What I care about is this is a supply and demand asset. The liquidity is not present yet. The liquidity will be present next year, as far as I'm aware, which means that this is going to be the thing that sells off when oil is rising, when gold is rising, when stocks are fluctuating. Bitcoin's going to sell off because it's 24 hours a day, and when people are uncertain other places, this is going to be the easiest and shiniest sell button that exists. We also have to think about it just from the logic and the psychology of most of the bulk of buyers are either right where we are right now, according to the anchored volume profile, or we have a significant amount of buyers from about 86.5 to about 98.9. Now, those are individuals who either do not know that much about Bitcoin, or they were buying it in the ETFs, or in general, they're super late to the game for the majority of their cost basis to be at those levels. So what you are asking all of those individuals who jumped the gun and bought last year, what you are asking for those individuals to do as we near those prices again is to not sell it and to hold on or buy more, which is not reasonable. These people will get flushed out. These people will see as the price approaches, right, like I said, right around like 86K-ish, as the price approaches that, it's going to be really hard for all of these individuals who've had their money sitting in there for almost a year to see a 5% haircut instead of a 30% haircut and not be like, all right, well, shit, I'm going to sell some of my Bitcoin, like maybe I'll buy some more later, but like, I think I would rather move this in something else that's more predictable at the moment. That's just how anyone who is managing their assets is going to think, other than us psychopaths who just understand, like, I just want more exposure to Bitcoin. I don't need to reduce my exposure to Bitcoin. I want to increase my exposure to Bitcoin at every opportunity I can get, which is why we're doing these videos, is just so you can have a more accurate understanding of how the price is going to behave. Because there's nothing wrong with DCAing whenever we are below the weekly or monthly SMA, period. You're going to get paid back over the long term for that. It's going to be worth it. However, there are long periods of time where you might be buying here and your cash will be better off just waiting a couple weeks, a couple months, I think by like June, it would have been appropriate in 2022 to start dollar cost averaging heavy. You did not have to wait until the price was at 15.5. 20K would have been completely acceptable. And I think it's the same case for this cycle now, even though I'm saying that I believe that the price can go a little bit lower to 34 to 39. Anytime the price is below 60K, below 50K, you would be very foolish not to buy Bitcoin at that time. That's just going to be historically very cheap. I don't think that we ever see that price again after this cycle is done. To briefly repeat what I repeat a bunch of times on this channel, if 2026 the news stations could only run one story, that story would be, how low can Bitcoin go? Once they are tired of running that story, it will switch to, in 2027, the question will be, can Bitcoin get back to 100K? And they'll milk that story for as long as they can. Probably most of the year it'll chop on its way really back to where it is now, these ETF levels initially, and then to the all-time high levels and the 2025 breakdown levels that like 70, whatever that was, 74.4, 76, 78, that region I think is going to be important on the way back up in 2027. And then moving forward towards the end of 2027, early 2028 is the first time that we'll see 100K plus, I believe. So it's going to be very boring, you know, for anyone who is like really expecting crazy gains. That's kind of why I've been studying these 4-hour shifts of the chart so that I can take more perpetual trades. But for the most part, what we have to look forward to now is we're above this 50% range for the range between 76.2K and 64K. We've been talking about for weeks. We've been talking about that since it broke in February. So what that means is if we close the week above the 50% mark of the range, that gives us permission to start the week off and make a push towards the top of the range, towards 76.2K. Now, the only problem is, as this candle prints here, it doesn't really matter where it prints, this weekly SMA is still going to get pulled down lower. Now, I don't know exactly where, but I would imagine it's at whatever, like 84 and change, 84.5 right now. I would imagine it's going to get pulled down to 82.5 or something like that. And then it's the same thing. How long does it take before we interact with it? By the time we interact with it, I bet you that's probably going to be somewhere between 80 and 82K. And it's not going to behave like it did in previous cycles. In 2022, where we had an interaction with it, the weekly SMA was towards the top of the range still when we had an interaction with it. Towards the top of the range, and then this 47.6K pivot, which is literally the 50% mark of that 96K one, which is why I thought it was so important originally, that acted as resistance at that time because price broke right above it, but could not stay above that. It was like asking for it to hold two things at the same time, and it could only hold one of them. And then losing one made it drop the other, like juggling, I guess. You can't juggle too many SMAs and Fibonacci pivots. You gotta keep it easy with only a couple at a time. So that's what we saw at the moment. This is when we were already below the weekly SMA. That's when we had that interaction with 96, which again functionally is twice that 47.6K pivot. Call it 48K pivot, whatever. Same thing functionally. Again, Bitcoin is math, not just money. I say that all the time as well. So when we saw a failure there, it just made the weekly SMA continue to go lower. So by the time that we actually see an interaction there, that would mean that the price has to not go like from here to there to have a retest. That means the price has to go from here to there to have a retest, which I don't think is very likely, especially, and this will really depend on the next couple of weeks. And I don't want to say bullish, but I am biased towards the upside in the next couple of weeks. So I don't think that this weekly SMA is going to get below the 76.2K pivot right now. I think we will have a favorable interaction with the price above that 76.2K pivot before we see another interaction with the weekly SMA. However, I do weigh this older Fibonacci pivot at 80K. I do weigh that as more significant than the 76.2K one, and I do think we are going to have the weekly SMA basically sitting on that by the time the price actually interacts with it, and I think that is going to act as support. It may temporarily act, or as resistance, sorry. It may temporarily act as support. Again, if we have a strong interaction with the weekly pivot, and then price is able to have a strong reaction to the weekly SMA instead of chopping off the weekly SMA. If it chops off the weekly SMA there, then that 76.2K pivot is not there. Like there's not enough weight there to actually, like, look at that. look how thin it is at that part of the anchored volume profile. That's the other part of this, is not only do you need all of these people as the price is getting closer to where they're only 5 or 10% in loss instead of 25, 30% in loss. Not only do you need those people not to panic, but you need new money to enter in as those people are selling. It's significant volume in this range in order for that to maintain momentum instead of give it right back after we have that interaction with the weekly SMA. So that interaction with the weekly SMA is really all that matters right now in the short term. I just don't believe that it's going to be as high as 96K anymore. I think it's going to be somewhere between 80 and I was saying 84.5K, but we're already getting to 80 to 82, and it's just going to get lower and lower by the time that we actually have an interaction with it. So by and large, that is still my estimation of what the price is going to experience. We are above this 50% mark of the range, which is good. That gives us permission to have another run at 76.2K. Hopefully before the weekly SMA is too much lower, but regardless, by the time we actually interact with it, that means all of this price momentum back to 96 is what we have to be able to fill volume-wise, and it starts getting very thin right at 86. I think a lot of people at that time are going to sell. They're going to make their decision to go buy oil or gold or whatever. They're just not going to want to stick around with Bitcoin, with so much uncertainty around it. Of course, there's a possibility that I'm wrong, and a ton of money floods in right there, and we start rocketing towards all-time highs. But as far as I'm aware, the stablecoin acts do not fully go into effect until next year. The banks have become the new buyers of US debt because China and Japan and Russia and everyone else is no longer buying US debt, which means that we, the people who use these stablecoins, are now the buyers of US debt, holding up the entire system. As far as I'm aware, again, that happens next year, not this year. All right, that's enough rambling about the higher time frame. Let's take a look at this 4-hour trade, and we'll keep it moving. Get back to our lovely Sundays. Sweating my balls off in my room right now. Like and subscribe if you're happy that I'm not running the fan. So we had another interaction with that 73.8K. Now that's a pretty big wick. So obviously if you were paying close attention to the chart at that time, that's an amazing short trade. Really, really good short trade. 4+% back to the SMA. And when I described that trade setup on Friday, I think I made the video before that actually happened. I think I was like right around here and I was deciding to stay out of that one. That was a logical entry once we actually got 2 clear breaks. Typically anytime where it looks like that, where both candles that close outside, either above or below, when they both close right next to each other, that's a great sign for an entry. In this case, a short entry. I did expect that we were going to show strength at the 4-hour SMA again. So even if you caught this one late, that still would have been a 2% trade. In hindsight, I don't really know why I didn't take that one, to be honest with you. I don't have a good excuse. Like that's a beautiful setup. I was of the opinion that it wasn't going to continue to break below. And I didn't know how quickly I believed that movement was going to happen, but very similar to this other one. Which I can't remember if I took that one. I think I took that one. Very similar, where it was like a quick interaction with the 4-hour SMA, and then you had to be gone. Otherwise, you already would have been out of profit. Here, if you bought it perfectly, you would still be in profit, not by much. But if you bought anywhere in here, you would have already needed to long be out of that trade. So a lot of times these swing trades are like you're not in it for that long. You're talking about maybe a day. If you want the full move, but even that, in 20 hours to get the bulk of the move is still, I think, more than acceptable, specifically looking for these perpetual contracts. So the main reason I was waiting at the moment is because I do think the general shape of the chart, as I've indicated over the course of the rest of this video, the general shape of the chart at the moment is bullish. Like the trend is favoring upside. So I knew that this was going to be a short scalp trade to the downside, and I just wasn't super confident of how quickly it was going to play out versus, does it need to chop and stay above it? We've been showing strength on the 4-hour for the first time in a while. I mean, that's strength, but it's like a rational strength. It's like a lot all at once. This is healthier. This is much healthier, that we have a ton of different candles of varying volume lengths that have strong interactions with the 4-hour SMA, which technically they did here. We had chopped around it for a while, but it's just the reality is we spend most of our time in between the Bollinger Bands instead of breaking them. That's why I like to use the breaks as entries. Just sometimes you are wrong, or sometimes you have to be patient, which means you got to be careful with these contracts. I'm increasing my size this week, so I will be paying attention to the next setup. Unfortunately, I think it might be another short, probably not even as good as this one. I would imagine that will be a much shorter one, because again, I just think in the short term, price is favoring the bullish momentum at the moment. the closer we can get to that 73.8K again. Like, I doubt that it would be smart to short it this time around. The chart might say that it is, but I think it's going to be an instance where it's like here and it just continues up, even though it's on the top band. So I am waiting at the moment. I really would like to see, I would not be bothered personally if I just wait closer to the end of March or middle of April to see that full progression towards 86, like I said, and then just actually short with gusto then, rather than trying to catch all of these like quick short trades. But again, just to put it in context, like if you didn't even get this at the perfect time, go away, sticky keys. If you didn't even catch this at the perfect time, you still probably could have caught a 2% trade. That's 20% on your money if you're trading a 10x leverage contract on the Coinbase Nano BTC perpetual future contracts, which is what I'm trading. You can trade the the overnight levels, or like the lower margin. I think it's like 3.3 or 4.2x depending on the time of day and the liquidity for the contracts, which is still very acceptable. That means you would have made 8% on your money. Still very good. But yeah, the 10x leverage contracts are pretty fucked up. So like if you have $1,000 in and it goes 2%, congratulations, you just made $200 on your money. So it really comes down to your position sizing, your risk tolerance, and then you've got to have really well-defined entry and exit triggers. And for me, entry trigger is a break of the candle. And ideally, again, if we get 2 closing candles like that, that's the clearest indication. These guys, that's a single candle break. It's a single candle wick. That doesn't tell us shit. Now, in this instance, still would have been a decent trade. I hate you so much, sticky keys. Still would have been decent. Still could have caught almost a 2% trade, 1.5% trade safely, which again, on $1,000, that's $150 that you could have made off of that very short one. This one in particular, you would have been wrong. This one in particular, you would have had to wait for a while to be correct. This one, same thing, you had to wait a while to be correct. This one, you were correct. This is the actual best entry, is one of these two. And it's the same case here, where this one, too early, though technically correct. This one, too early, though technically correct. These two are the ones you actually want to pay attention to. And this guy was what I was waiting for. I wanted a break on the Bollinger Band. I did not get it. That one I don't think would have been quite as clear of an entry. I'm sure that it was more clear on the lower time frame, on the hourly chart, on the 15 and on the 5. I'm sure that you could have seen that entry. But that did keep me from longing at that time. I wanted to see a Bollinger Band break. And that's kind of what I'm trying to figure out for this strategy, to be honest, is like the mix between my spot exposure, which I'm mostly focused on. Later on in the year, I plan on leveraging credit balance transfers in order to buy a bunch at that time, basically like lump sum investing towards the bottom, like I said. But anywhere below 50K, I would be more than happy to take on a little bit of debt to buy a bunch of Bitcoin, just because the math favors it. Every time I run the math, it favors it, even if you're paying a small amount of interest, depending on the amount that you're borrowing and how much you're paying back for it. I have a whole video on that you can watch if you want, how to leverage your credit to buy more Bitcoin. Yeah, check it out. Anyways, that would have been the best long that we have at the moment. We're currently waiting for another one. There is a possibility that we break below this 4-hour SMA. Again, depending on where we close for the day. We still got another 4 or 5 hours before the close today. We are still in bullish region, but if for whatever reason we need to see a breakdown, we could see an interaction with the Bollinger Band right at around 70.2K, which is probably going to be a good short-term entry for a long. I'm not really sure if I believe that won't be broken again. I don't think it's unreasonable for us to close here and the candle start and then give back some of it and then go back up. But it does put some pressure that next week will be bullish if we actually see, especially if we can get back above 73.8K. But I don't think that we see that before the end of the day. But that would be early in this week. I would imagine we see another interaction with 73.8K. So kind of regardless, I mean, I would at least, like these guys here, you might ask like, oh, why didn't you take a long off that, Jacob? Why didn't you take a long off that? I don't think that the SMA is as reliable for entries. It's just not. We interact with the SMA way more often than we interact with the Bollinger Bands. So just by like a law of probabilities, there's more probability that you can't predict what the price is going to do when it hits the SMA than you can when it hits the Bollinger Band. When it hits the Bollinger Band, it's one of two options, and one of the options is typically significantly more clear than the other one. Now this one, again, we're still higher than the price was when it broke to the upper side of the band. But if you're specifically looking for scalp trades, which is the whole point of this strategy, then you already would have had multiple opportunities to close that trade in profit. And it would have been very clear to you to close that trade in profit if you actually had rules that you stick to. So for me personally, those are the rules that I'm focused on sticking to, is I'm looking for as close to, again, probably could have taken this, would have been a little bit risky, probably could have taken this, as close to a wick or a candle close outside of either side of the Bollinger Band as possible. Does not matter to me whether it is a long or a short. I don't care. I care what the chart tells me. And then paying attention to an interaction either with the Fibonacci pivot or with the SMA. And that's what tells you to close it or to keep it. In this particular example, when I took this trade, I ended up closing it in here because we were flirting with the downtrend anchored VWAP, and it wasn't clear if we were going to break above it or not. And at the time, I did not have enough cash to be in an overnight position. I was still trading like with one contract at a time. But at that time, when we saw a strong interaction with the 4-hour SMA before a failure, this is one where I believe that would have been like a 90% trade total, which is pretty fucked up. If you just casually catch one of those from time to time, yeah. More than a 90% trade, over 100% that you would have made on your money in the course of just a couple days, had you had the cash basically just to sit in it. So that really is the power of these leverage contracts, is like if you have the conviction and the cash to just sit based on what the chart is actually telling you. And again, it doesn't tell you this every single time. It's not going to break the SMA every single time. There are times where it's going to bounce off of it, and you need to pay attention. But again, this is a 2 to 4% trade. This is a 2 to 4% trade. That's amazing. That's 20 to 40% of your money every time it does that. And that's why I personally have been looking for these. I've been trying to figure out a trading strategy that wasn't super complicated or luck based, or like there's so many channels that I've seen where they trade like 8 different things, like 10 different things. I don't want to do that. I want to trade Bitcoin and nothing else. Now, does that mean I take less trades? Yes, it does. Are they higher probability trades? Yeah. They are. Even I lost a trade the other day. I lost $7 because I was impatient and I didn't follow my own rules, and I deserved to lose that money. I'm still up 31% total on these contracts from doing it, just based off of I pay attention to a break of the Bollinger Band, either to the top side or the downside. What I really want is 2 candles that close right next to each other. That tells me, okay, cool. Price got what it wanted. It's going to head in the other direction now. Would have been the same in this instance. I think I'm going to start weighing that heavier, specifically the 2 candle closes right next to each other, because pretty much in every instance where that's the case, it's like very obvious what to do next. Very obvious. Very obvious. I mean, this is one where you probably would have got faked out. I look at that one a lot, actually. That one is fascinating to me, because you could have taken a quick scalp, but very quickly you would have been wrong. But you still would have been correct if you could have just waited through, oh my God, sticky keys, I hate you. You only would have been down by about 2.5% drawdown, and then you would have been very correct. So that is the thing too, is the 10x leverage contracts, you're in a more significant position of being liquidated. 10x leverage, it's about 8% before you get liquidated. But if you are comfortable sitting in 1 to 2% loss, say you bought here and you bought it early, which again, I don't know why you would not wait till the candle close. If you bought here, you were just early, the price went down by whatever, you're 2 or 3% in loss. Actually, I think this is very similar to the one that I ended up buying. It was somewhere in here, I believe. You're in whatever 1 or 2% loss for a short period of time, and then you're in nothing but profit for the rest of that. That's still, even there at a terrible entry, you still would have been like 80% in profit on your money. So it really is just based on, like, you need to have strict entry mechanics. And for me, I'm just going to continue to use that same strategy that I've been studying because I don't want to look at other charts. I want to look at the Bitcoin chart. That's why I have a channel called Bitcoin Escape Plan, so I can talk about the Bitcoin chart all the time. So me personally, what I'm paying attention to now is, do we have a bearish interaction with that 4-hour SMA that necessitates us going back down to around 71.1, 70.2K? That would indicate a long at that time. Otherwise, we kind of just got to wait. We are a little bit closer to a potential short, but kind of same thing. You know, my general expectation is that the price is going higher at the moment, which means those shorts are going to get tighter and tighter. And I kind of want to wait until we're back in the regime where it makes sense that shorts are going to continue, which to me, again, is going to be an interaction at closer to 86K. So if you want to just sit in spot at the moment, that's probably less risky to capture this initial rise, which, what is that with spot from here? Oh my God, sticky keys, go away, bro. I mean, that's still an 18-20% ride. Still pretty good. You know, even to do that with spot, if you don't want to risk with leverage and you just want to buy for the short term on that, I would much rather, I mean, that's a 200% move with 10x leverage. So me personally, I would much rather look for a decent entry and just let it ride to the long side for the rest of this. I don't want to buy it in the middle of nowhere. That just means I'm going to have to pay a bunch of perp funding rates and not have a clear stop situation. You know, I want to take my stops on structural points in the chart where structure breaks, not off of arbitrary 1 or 2% stop losses or whatever. And that has been helping me so far. You know, I was not that upset with the $7 loss the other day. Could definitely be a lot worse. And that was just based on the structure of the chart. So me personally, I wouldn't take a trade off of the 4-hour SMA unless we start to break below it. If we start to break below it, even if we don't actually see an interaction with that bottom band, I may take a long entry. That's not financial advice, but I may take a long entry even if we're slightly above it, especially if we get another one of these guys. If we get 2 4-hour candles that close right next to each other like that, I don't even care if I end up getting it there. That's fine with me. That still would be a very nice trade. And basically just to ride this initial momentum, you know, like we want to pay attention to that that downtrend anchor VWAP as well. That's at 69.9. I actually don't think the price is going to break that. I think it's more likely that we show strength at that 70.2 or 71.2K level, even if we do retrace to it, which again, price favors the upside temporarily. Even this is starting to curve and flatten. So that also, as long as we're above it, is favoring more support to the upside. So me personally, that's what I'd be looking for, is some type of long entry that I would imagine I would chill in that trade for a while if I have the capital to buy the 10x leverage ones for overnight, which just means I have to buy less of them, essentially. But yeah, that's what it looks like to me at the moment. We might have another strong interaction with the 4-hour SMA, and therefore we don't need to retest that. But it's just going to pinball us between that 71.8K until we can break above it. We are showing some compression on the Bollinger Bands, which does mean we will snap soon to one side or the other. It looks like it's favoring upside to me at the moment. So we'll see based on the weekly close at 5 p.m. PST today. I will go over that in tomorrow, Monday's newsletter. And again, if you are not subscribed, you can go subscribe at bitcoinescapeplan.com and you'll get it in your email. Otherwise, you can just read it on the website. More to come on the website very soon. I know I keep saying that, but it's actually true this time. All right, 73.8K, pay attention to that. 71.2K, we want the price to be above that. And as long as it closes right around there for the week, it's very bullish. And we should expect continued upside momentum. Thank you so much. I'll see you tomorrow.